joined as always by Jimmie Lenz. Jimmie, good to see you. How are you doing, my friend?
Man, you know what? I am a little bit damp and cold this morning. It is the weather has struck
Yeah,
Chapel
man.
Hill, North Carolina. We're getting our first taste of late fall. Leaves are down, rain, and
Yeah, it's
it's
definitely a crummy
kind
day.
of
I love
chilly
your
out this
weather
morning.
updates, by the way. You always start off with a weather update, so I'm sure all of our listeners are just dying to know uh, what the weather is in the in the
What the
triangle
weather is
here
in
in North
Chapel Hill, North
Carolina.
Carolina?
Normally, it's awesome. I mean, one
Yeah.
of the great things I love about this area is the weather, but today is not one of those days. So
No,
yeah,
we can
for
normally
sure.
go out and play golf year
So
round,
Jimmie,
which is great.
back by popular demand, right, is a S1 deep dive. We've gotten a lot of feedback from our listeners about how much they enjoy these episodes. Much to our surprise, I don't think we anticipated that.
We are surprised by this.
But we decided, you know what, we like to keep our listeners satisfied. And so we are doing today a deep dive into Grayscale's S-1, okay, which they filed with the Securities and Exchange Commission last week. Now, our previous two S-1 deep dives were Circle and then the crypto exchange Gemini. And our takeaway was that both of those, from an investing standpoint, right, would you buy these company stock, were stinkers. Okay, was basically our takeaway. They might
Yeah,
be great
space go
places to
takeaway.
work. They might have, great products, right? That was not, we assessed this strictly from would you invest in this company or not. I gotta say, Jimmie, and you and I have not exchanged any thoughts about other than, I sent you the link to the S1, so I don't know what you think. I gotta say, this might be the stinkiest of the stinkers, right? With Grayscale.
You know what I was thinking we should do? We should put together a chart of all these things when we do the reviews
Yeah.
and how the stocks actually perform. Are we as good as
Hmm.
paid analysts? So far,
We're doing
we're
good. I
batting
mean, I
about a
think
thousand.
because you sent me something about Circle. So everyone knows, right? Crypto is plummeting right now. And so sort of all crypto related companies their stock prices are tanking right now. I mean, Circle had such a huge pop, like a first week pop, that I still think it's trading above its IPO price. I mean, but it's getting there fast. It's getting there fast. But it's certainly
Yeah.
the stock price is certainly significantly down compared to when we did the episode. So yeah, so we'll that's a good point. So
Yes.
maybe we'll revisit that in another episode here. Okay, so let's just dive in on Grayscale. We'll do a little just kind of a general overview of the company. I think most of our listeners are going to be familiar with this company. I mean, they certainly are a pioneer, and they
I don't know
so
if they're familiar with the scope though. The scope of the company
so they're
might
a
be a little
pure
bit bigger than
play
some people think.
digital asset manager, right? This is an asset manager, exclusively,
Right.
at least for now, digital asset, crypto related tokens companies, right? So as of September 30th, they have $35 billion in assets under management. They claim to be the largest digital asset focused investment platform in the world. Their product set includes exchange traded products and ETFs. So they have roughly 34 billion in assets under management for those products. And then they also have a smaller private funds product offering, which has a little over $1 billion in asset under management. So their crypto tokens that they cover include 45 tokens. They have 40 plus products. They claim to cover 80% of the crypto market cap. And they position themselves as the diversified way to own the asset class rather than just Bitcoin and ETH. We'll get into that a little bit. Jimmie, I mean, I will give them some credit. This is a pioneering company, right? Because they launched the GBTC, Grayscale Bitcoin Trust, in 2013.
Trust. Yeah. Yeah. I mean, when you look at them, when you look at Grayscale kind of from the outside, from a high level, I mean, they look like any other, large investment manager slash mutual fund type company. They're pretty comprehensive in what they cover. They offer a number
Mm-hmm.
of different investable products. and they've continued to grow their products over time that to correlate with what's going on in the
Yeah.
environment. But they have been pioneers on in some of the asset classes. They put new things out there, and I think probably from a as I said a kind of a company standpoint, they're they're one of the more staid. I would think they replicate a traditional investment manager probably closer
Oh, for
than
sure. I
almost
mean,
anything else
they're
out there.
pure play investment manager, strictly from but digital assets. And look, the S1 and the way that they frame it throughout in this potential IPO is that this is really the capstone of a decade-long battle to normalize crypto exposure in regulated wrappers, right? And this is something that we've been
That's very
talking about
true.
on this
Yep.
show for quite a long time, right? So, look, I think for those of you who have been sort of cheering and wanting Bitcoin ETFs, other type of investment products, I mean, I think you all owe a debt of gratitude to Grayscale because I mean, 2013. I think they mentioned in the. I mean, Bitcoin was $10. I mean, it was like crazy cheap. Or I think Barry Silbert said he first bought it when it was $10.
Yeah.
I
Yeah.
forget, but I mean, 2013, no one was thinking about Bitcoin, let alone in investment vehicles like this. So they launched the Bitcoin Trust in
No,
2013.
no,
It was
not as
available only
an
to
investment
accredited
vehicle.
investors. Then GBTC has sort of undergone an evolution. So in 2015, it became publicly traded. Then in 2017, they launched the Ethereum Investment Trust. 2021, GBTC and the Ethereum product become SEC reporting digital asset vehicles. They ultimately tried to get BTC, that product, transformed into an ETF, right? The SEC tried to stop them. They sued the SEC. They won that lawsuit. And so, really all these Bitcoin ETFs or ETPs, as they technically are in the market because of that lawsuit, right? So, you have Grayscale
Right.
to thank for that. Then in 2024, they launched mini trusts for both Bitcoin and Ethereum. And then just this year, Jimmie, they became
Yep.
the first asset manager to launch a ETH staking ETP and a multi digital asset ETP, right? A diversified ETP. So, look,
Yep.
a pioneer
A
in a
diversified. Yeah.
lot of ways. So that's the company there. Let's talk about the chairman's letter. Okay, Jimmie, I want to get your thoughts on that. This is a common feature in S1s. Now, what's interesting
Okay.
is that
Yep.
um, you know,
Yep.
this was written by Barry Silbert, a well-known figure in crypto. He's the CEO of Digital Currency Group, which
Yeah.
is the parent company of Grayscale. Um, he's the founder and chairman of Grayscale. He's not the CEO. So normally you see the CEO, and for most companies going public, the CEO is sort of also generally the founder. But this was not the CEO writing that letter. Did anything stand out to you, Jimmie, reading kind of his story? Because this is a way to shape the narrative, right?
It is a way to shape the narrative. It's a way to introduce the companies. You and I have talked about these, letters from above, and how they're handed out. I mean, it's obviously it's a very positive note to the whole thing, which kind of contradicts some of the
Yeah.
things that are actually going on. He talks about the growth, talks about being a pioneer, which they have been in and kind of he kind of alludes to some of the outlooks. And I don't know about you, but there were a couple of things about the outlooks that didn't quite square with
Yeah,
what
I
we see
mean,
going on.
he recognizes, and this comes up repeatedly throughout the S1, that he has to differentiate Grayscale from the numerous other investment options that are available to
Right.
investors that want exposure to digital assets, right? So why buy the key question, Jimmie, and we're going to come back to this repeatedly, why buy Grayscale stock, which is just a pure play crypto asset manager, when you can buy crypto on spot exchanges, when you can buy stock in Circle, when you can
You
buy
know,
stock in Coinbase, when you can buy stock in Bitcoin mining operations. So, they have to stand out, and he tries to do that. And I want to read what he says here, Jimmie, and I want to get your thoughts after I do this, okay? So he says, we believe Grayscale
okay.
offers investors recurring revenue, high operating leverage, exposure that grows with the market, and a model built to exceed it. He goes on to say, compared with other public market proxies for digital assets, we believe Grayscale offers broader diversification than stablecoin issuers, greater capital efficiency than miners, steadier and more scalable economics than exchanges or brokerages, and a superior return on equity to digital asset treasuries. Okay. So, what are your thoughts? Trying to differentiate there. Response.
Yeah, they're trying to differentiate themselves. Well, I've always been a fan of buying the underlying asset and not paying a management fee of everything. I always ask people who buy bond funds, why? Why are you buying a bond fund? Well, it's a little bit more diversified. It's like, yeah, but you're paying a lot of money for that. And oh, by the way, you can do it yourself. And eliminate. You can kind of pick and choose what you want, and you can eliminate. You can still have a diversified portfolio, but eliminate the management fees. And I think that's the case here, as you point out. It's so easy to own all of the underlying without the management fee that's applied to these things, and the management fees are not small. If you look at the fees here, I said this looks a lot like a investment company or a mutual fund. And even, if you look at even those, these are rather expensive management fees. If you consider it like other ETFs, it's a really expensive management fee.
They talk about, Silbert mentioned it, and it comes up again throughout the S1, this concept of operating leverage. And in all these S1s, right, there's sort of key phraseology that you have to unpack, right? Like they kind of, if they repeat it enough, it's sort of like you realize that this is part of the story they're trying to tell. And essentially what they mean by that is they say, look, if crypto prices rise, as they expect they will, that means their assets under management will increase. But because they don't have, their variable costs are very low, right? It's primarily fixed costs. So that as the assets under management increases, their revenue is going to grow much faster than their expenses. So their margins are going to expand significantly. So they go on to say that our business becomes more profitable without equivalent increases in cost. But as you said, well, I can just buy Bitcoin. Like I could bypass the cost altogether, in other vehicles.
Yeah, you can bypass the cost.
And by the way, there's other lower fee ETP options out there, as we'll get into. But really the selling point is premised on, well, if crypto prices go up, like, our profits will go up at a higher proportion than that, which is, I think, dubious to say the least. So let's talk a little bit about the offering here.
Yeah, I mean,
yeah.
So, so
go for
I'm going to seize on that for just a second. That implication that, if crypto goes up, or will go up. Well, I mean, yeah, if you're, because they do charge on an assets under management basis. So, as assets go up, they should make more money. The problem is operating margins are coming down fast in this particular company. And I'm not surprised, because they're, as I said, I think the fees are kind of high. They seem to be on the high side. And so in the last year, we've seen prices go up, but we didn't see their profits go up. We didn't see their operating income go up. And I know we're going to talk about that in a minute. But that it assumes that everything stays equal. Operating income margin stays the same. That there's no additional competition. That a lot of other things don't happen, and that's not the world that we live in.
Look, let's just jump there, since you took us there. That's totally cool. We jump around. We go wherever the conversation takes us. So the financials, you're spot on, right? So essentially, all of the company's revenue is asset-based management fees on assets under management in their products. Okay. There's no trading fees. There's no spread capture. And fees historically were very rich on the GBTC and the ETH product. Okay. Now those have come down post ETF conversion. They're still high compared to their competitors. So there's competitive pressure to lower those. And as you said, Jimmie, right? If you look at the first 9 months of this year compared to the first 9 months of last year, right? Revenue is down. Okay. So the first 9 months of 2025, the revenue was just under $319 million. Okay. Compared to roughly $398 million. So that's a $79 million decline. over the same period, year to year, in a period in which, Jimmie, crypto prices were higher, right? So that was a huge.
We're
So crypto,
high. We're high. See,
despite
that's
the
the thing.
recent, right? So this
They
was
were really
September 30th.
high.
So when was the high? Was October, right? I mean, obviously it's come down quite a bit, but it was about a month ago we reached
Right.
all-time highs. So for most of
Yeah.
2025, crypto prices have been, especially Bitcoin and ETH, have been significantly higher than they were in 2024. Yet their revenue has declined, which was a huge red flag to me.
Yeah, it's a huge red flag. And the other thing I think that is a red flag is they disclosed that their fees have been coming down, but they're still not even close to where they are for normal ETFs. I mean, if you look at the average ETF, I actually looked this up just to confirm what I thought they were. The average index tracking ETF
Yeah.
is about 40 basis points, and the active the average active is less than 70 basis points. So, I mean, they have still a long way to fall to get to where other types of ETFs are as far as their fees. I mean, I got to think, as more people, and in particular, as other the other firms, maybe more established firms, enter the fray, we're going to see those kinds of things happen. We're going to see those
Yeah.
folks coming, more folks coming into this, and I have to think it's going to put downward pressure on those
Oh, of course, there's
what
going to
they
be
can
fee
charge,
compression,
don't
as there
you?
has been in the industry for the past 20 years, right? I mean, you can't escape these broader
Yeah,
dynamics. It's pretty clear to me that they are sort of assuming that the market will sort of afford them an element of goodwill because they were the first and they fought these battles with the SEC. Because they're Yeah,
that's
exactly,
Vanguard how that's
right?
going.
And that's just not, like there's no loyalty in markets. I hate to break it to you, but you're right, Jimmie.
No,
I mean, look, their fees. So their most popular product is the Bitcoin product, okay, the GBTC, right, the OG. 30,
right,
as we said earlier, 35 billion in assets under management. The GBTC product, okay, for ending in September, 20, roughly 21, okay, billion in AUM. So over half, okay,
right.
of their assets under management comes from just GBTC. Okay. The next biggest product is their mini. Now they're
Hmm.
trying to kind of compete on fees with these mini products, right? So they have a BTC mini and ETH mini. This, if you own a share, it's a cheaper share. You get less sort of exposure to Bitcoin, right? As each share results in a lower exposure to Bitcoin and ETH. But they're trying to do something on the fees. So the
Right.
BTC mini comes in at second with 5.5 billion. Okay. And then, you have ETH, the ETH mini, and then the rest is just really, not a lot. So it's Bitcoin and ETH.
Pretty
And,
small.
for the main products there, you're looking at 150 to 250 basis points in fees. Now, the BTC and the ETH mini have
Yeah,
15 basis points, but AUM is still small there. Let's compare that, Jimmie, to some of their competitors. Okay. BlackRock, I
yeah.
believe it's 15 basis points.
I
Yeah,
think
so
I
it's
was going to say
15
I think it's
basis
under 20
points
basis points.
for IBIT. Okay, let's look at Bitwise. I think their core Bitcoin ETP is like 5 basis points. It's quite small. Um, so they are
Yeah,
significantly more expensive on a fee standpoint than their
yeah,
main competitors. And you've seen, right, as a result of that, outflows from the GBTC product, right? The moment that all these 11
yeah,
ETPs listed, right,
yeah.
BlackRock was always going to be, right? I mean, it's the 800-pound gorilla for them. Okay. I don't see how they,
Hmm.
to switch animal metaphors here. You ain't slaying that dragon. All right. Um, so I don't know like
Yeah.
what they do, frankly, unless they just really get into some active managed products. It's going to be a tough road to hoe.
I don't know. I don't know what they can. I don't know what they can do because their operating expenses continue to go up. Their revenues go down. The revenues are going down. Uh, I don't know how. Yeah, I mean, and as you said, the pressure is going to be on
Yeah.
dropping fees, not raising fees. Even if I mean, just to stay even at this point. I mean, crypto has to go up at a pretty phenomenal rate. And when you kind of apply the fact that they're going to probably have to bring their management fees down to compete with others,
I don't know either.
I don't know how they can do it. I mean, it just
And the growth story
it's
that
not
they're
a chart that
telling
looks
is
good.
not all that compelling, to be honest with you, Jimmie. So, look, they
No,
talk about, okay, well, there's going to be broader institutional adoption of crypto, which is true. Like that trend has played out. So they cite these stats, right? So they say, 3% of institutional investors expect to increase their digital asset allocation in 2025, with 59% of those expecting to allocate more than
right,
5% of their portfolio. So they say, look, the way to go about this is we have to have relationships with registered investment advisors, private banks. We got to get in front of, right, the allocators. And so they say, we have completed diligence or in the diligence process with three of the largest wirehouses in the U.S., which collectively manage 4.2 trillion in AUM. Okay. They also mentioned the White House executive order from earlier this year on democratizing access to alternative assets for 401k
right.
investors, and say, look, there's a chance that we could get into, our products into 401k plans. The problem again here is you're competing against BlackRock. BlackRock has relationships with
Yeah,
every single registered investment advisor. Like,
sure. And they offer, I mean, and they offer a full suite of products. Oh, and their fees are lower. I mean, the one thing that I think everybody does look at is, I mean, these fees are kind of a big deal. In particular, if if you want to start selling this, if you want retail, brokers to start selling these, and I
mhm.
mean, they're going to look at that and say, but why are your fees 3 and 4 times what
Yeah.
some of the competitors are? I mean, that question is gonna come out
Yeah,
in
and
every new
and then they
product
talk
committee.
about some of these other things that I wasn't quite clear exactly how they were going to play out. So they talk about the Capital Solutions platform, which is essentially a kind of an advisory vertical where they work with protocols and companies on token and deal structures, and then maybe they seed those products. And I guess the logic is
Right.
that, well, maybe they'll be the first to list the ETP on that. Um, they talk about principal investments, which is essentially kind of a nod to the digital asset treasury company trend, where they'll just invest as principal in some of
Right.
these tokens. I mean, obviously that's not playing out really well right now. They talk about compounding via on-chain features like staking, right? So they'll, as they obviously have a
Right.
lot, and now they have staking ETPs where they share the staking rewards with the investors, but they're also, it seems like they're getting some staking rewards
With the
on their
investors, yeah.
own. I don't think any of those are going to be significant revenue drivers going forward. I mean, they talk about product expansion, like thematic
I
ETPs, like
wouldn't
on
think so.
AI or DeFi, multi-asset. I think that's definitely going to be the trend. But again, others are going to follow there. And then the higher touch private funds and active
Yeah.
strategies. I mean, look, active has been in decline for a long time now. Um, so
For a
yeah, just not
long time. Yeah. I mean,
not a
it's
compelling
funny.
story on the future here. I want to go back to the offering and then some of the sort of unusual structure here of this company and how this IPO is going to play out, Jimmie. So they're going to offer some,
It
and I
is
have
a
some red
little bit
flags on this, and I want to
unusual.
get your thoughts. And I think you probably looked at more similar deals than I have. So maybe I'm kind of concerned about nothing. But they're going to offer Class A shares. We don't know the amount and the price. Okay, so we don't know anything. How many shares they're going to
Right.
offer, the price. This is going to be a dual class share structure, which is common, right? So they're going to have the Class A common stock and Class B common stock. Class A will have one vote per share economic rights. Class B common stock will have 10 votes per share, no economic rights. Class B will be retained by the founders primarily. Okay. Now let's get into the structure here. An unusual structure they call it an Up-C structure, which they claim is common.
Yeah.
I have no reason to doubt that. It does seem as though it's I haven't looked at enough of these deals, but it does seem like it has played out in other contexts as well. So the company that is selling that is issuing the shares is Grayscale Investments Incorporated, okay, a Delaware C corporation. But the
Hmm.
operating business, right, all the AUM that we just talked about, right, that sits in Grayscale Operating LLC. Okay. Grayscale Operating LLC seems to be principally owned by DCG, Digital Currency Group, and some other investors, they don't really name them,
Right.
who hold LLC units. You don't hold a share in an LLC. You hold, you're kind of a member. You have a membership interest. So the operating company is an LLC, primarily owned by DCG. Okay, so the public investors will get Class A low vote stock. Okay, then there's this tax receivable agreement, which was a little confusing. I had to dive into this a little bit, and this strikes me as like a huge red flag, Jimmie. Okay, because essentially what's going to happen is that the LLC units are going to be exchanged for Class A shares. Okay, so um,
Right.
and then when that happens, the C corporation, right, the company that will issue the shares, gets then a basis step up, okay, in the assets, right, of the company. Okay. And that's going to result in these tax benefits because once the C Corp has this step up in tax deductible basis in assets like goodwill, intangibles, things like that, right, there's going to be more future tax deductions. But they entered into this tax receivable
Right.
agreement with the pre-IPO owners of the operating company in which they will get the majority of those tax benefits. So they're going to get roughly 85% of the cash savings that they're going to realize as a result of this tax basis adjustment. So that's cash flow that's not going to the investors and the Class A shares. That's going to the owners. And so to the existing owners, to
The
the
owners.
founders. And so
Yeah.
this really, as I've thought about this, this whole offering seems to be about nothing more than just cashing out the
A
original
tax.
investors
Yeah.
and giving them preferable tax advantages with very minimal upside for the Class A owners. I mean, it just strikes me as indicative of how the founders feel about the current market because it's like, look, they're trying to cash out near the top and they might have timed this thing wrong. We'll see if they go ahead. If they still proceed with this IPO, which given current trends is iffy for sure. But if they proceed, to me, it's an indication that they think the market has a ways to go to fall here. Because this is just nothing but cashing out the founders of this company, Jimmie, as far as I can tell.
Yeah, I mean, I'm not a tax expert, and this is an investment
Yes, yes,
advice. We
yes.
should
Not
probably have
investment
said that
advice.
to
Nothing we
begin
say in
with,
this
but
podcast is ever investment advice.
it's but no, it's not investment advice, and we're not tax experts. But it does seem like this is a opportune way. Well, and hey, you know what? You took the risk. You founded a company. You're ready to sell. You're ready to get your investment back. I get all those things. Not going to fault you for it, but I think that as you call out, Lee, it's people should be cognizant of that. And the tax treatments, I think, are something that you do have to. A lot of people will ignore those. A lot of people will look past it. I think it is something to kind of look at in this case. And honestly, I mean, there are a lot of
Mm-hmm.
questions about tax treatments going forward too. So don't on the IPO there is, and certainly going forward. And I think
Yeah.
they actually put those in the risks. There is tax treatment questions going forward for things like this. They're open questions. So yeah, I mean, it does seem like this is an opportune way for the early guys to
Yeah,
kind of
and
cash
I'm
out.
with you. I mean, like normally when I read something like this and I get like tax, my eyes gloss over, and I just like, well, I don't. And then I was like, you know what? Actually, this seems to be kind of a central component of the offering. Let me dive into this a little bit, and really, there's going to be future. I mean, essentially, there's going to be future cash flows resulting from some of these tax benefits that are not going to go to the shareholders. They're going to go to the founders, and I think that's the key point there. Now, Jimmie, this is also going to be post
Right.
IPO a controlled company, so Digital Currency Group will control majority of the voting power, which will make Grayscale a controlled company
Vote. Yep.
under New York Stock Exchange rules. This lets them opt out of certain corporate governance best practices. Um, and
Well, they're part of the job. They're still part of the Jobs Act too,
yes, that's right. That's right. So, and it's a smaller
because the
company. Yeah,
market
it's a
cap
small.
is
Yeah,
still under the
exactly.
jobs
So,
limit.
so they're not going to be subject to the full suite of corporate governance requirements that we normally expect of publicly traded companies. Now, they are, you know, targeting this directed share program. So they're going to allow certain existing investors in some of their products like GBTC to
Mhm.
get IPO shares at the offer price. I think this is, we've seen this before in crypto related IPOs. It's a way to shore up retail loyalty and kind of get that, try to get you into the meme stock territory or at least get the crypto natives on
Right.
board. And then, of course, right, you can't, go public without even mentioning the possibility of tokenizing your shares. So they mentioned tokenized Class A common stock as a potential future initiative. And obviously, a lot of folks are tokenizing their equity now. It's kind of a, why don't you why don't you just do it right out of the gate, would be a question that I would have.
Out of the gate,
All right,
yeah.
Jimmie. So that's kind of the offering. Some red flags there. Let's get into the risk factors. What stood out to you if anything, in the risk factor section?
Wow. I mean, so we have to, we say this every time we do an S1. I mean, the risk factors are for all these things are like dozens and dozens of pages for every IPO. It doesn't matter. It could be anything. Risk factors, they want to disclose everything possible under the sun. And man, they have a lot of things. So, I mean, the things that stood out were like the obvious things. There's tons of things around crypto. There's tons of things around crypto exchanges.
Yeah.
There's security issues around crypto.
51%
there's government
attacks.
questions
Yeah.
still. There's regulatory questions.
Mm-hmm.
There's tax questions. The one that stood out was one I mentioned kind of before was the unknowns around taxes, because this is both foreign and domestic. There's still a lot of questions around how these things are going to be taxed, state and federal. And so, I mean, there were, I tell people, and we just said it, the risks are for every IPO are huge. Look at those pages. I mean, those pages are, those are written. Lawyers scrutinize those. I mean, they want to make sure that everything possible is disclosed, and they disclose
a lot. And like you said, some of these, honestly, I was kind of thinking they were copied, verbatim from, the Gemini or the Circle S1s, right? Because as you said, sort of, cybersecurity, blockchain security, 51% attacks, volatility and cyclicality of digital asset prices, right? Regulatory risk, regulatory uncertainty. In regards to regulatory uncertainty, kind of they made a few interesting points. Is like, well, look, we could have essentially a Gary Gensler 2.0 comeback. They didn't say those words, but that was sort of the implication. But they also mentioned the fact that the CFT, like that the SEC has essentially under Atkins said that existing national securities exchanges can offer crypto-related products. There's nothing stopping them. And so they kind of raise that as sort of like, well, that could be like competition to us. They also mentioned the possibility that the CFTC could be given oversight, as Congress is aiming to do, over spot markets. And they are not a CFTC registered entity. So that would entail some new requirements on them.
New
obviously they mentioned the competitive landscape and the fee pressure risk. Okay, competition from large TradFi asset managers, other crypto native asset managers. One interesting point they raised, Jimmie, was around in-kind creation and redemption. Okay, so earlier this year, the SEC did approve digital asset ETPs to offer in-kind creation and redemption mechanisms, which Grayscale does not currently offer. And so they say, like, look, that could put them at a competitive disadvantage relative to pure ETPs that have in-kind creations, which allow authorized participants and institutional investors to contribute underlying tokens directly to form new shares of the ETP, which is often more tax efficient, right? That's kind of the reason you do that. For whatever reason, they do not do that. They mentioned that they're relying essentially all their, as far as I can tell, most of their assets are custodied, at Coinbase. At Coinbase custody, which we covered way back when all these ETPs launched. I mean, most of them are using Coinbase custody. So, clearly, if anything happens at Coinbase custody,
almost all of them are using Coinbase.
Yeah. What was that?
I said almost all of them are using Coinbase.
That's right.
I mean, it's become kind of the de facto.
That's right.
Custodian for a lot of these.
And then the final one that really stood out to me was kind of some of the shadier history, if you will, of some of their affiliated entities, notably Genesis, right? So Digital Currency Group also owns or did own Genesis. And as folks may remember, after FTX collapsed in November 2022, Genesis halted withdrawals. Gemini had partnered with Genesis for its Gemini Earn program. And so when Genesis froze withdrawals, there was over 900 million of Gemini Earn customers' assets that were trapped. Ultimately, Genesis did file for Chapter 11 bankruptcy. The New York Attorney General sued DCG, Genesis, and Barry Silbert personally. alleging fraud against hundreds of thousands of investors. Eventually, Genesis reached a settlement, and so they say, look, we Grayscale are not sort of shielded from those sort of corporate governance concerns, right? I mean, you have to obviously raise it in the S-1. So there is a
Right,
bit of
right, right.
a track record, and I remember around the time that there was sort of, sort of Barry Silbert had sort of took out a promissory note from Grayscale and whatnot. So, just something to take advantage or to consider, I guess, if you're going to invest in this. Which brings us to the final topic for today, Jimmie. Now it's hard to answer this question because we don't know the price, right? But from an investment standpoint, are you a yes or a no? And if or a yes under certain conditions?
No. I'm a no. I'm a no. And it's even if you took out all the other things, the governance, some of the risk questions and things like that. I'm not, because I'm just not a huge. I just can't get behind the business model. I mean, at its core, I can't get behind the business model. I mean, I know I don't even have to know. I can see the pricing pressures on this. The prices, the management fees, which is where they make all their money, are coming down. They're going to come down. If they come in line with what we're seeing in other, traditional, structures, I mean, they're going to come down by a lot, folks. And, I see their expenses rising, their revenues going down. It's like, this just isn't, I don't know, just from a business perspective, how they can grow. I mean, unless something really extraordinary happens, they figure out a way to do a lot more with a lot less. Just from a pure business perspective, it's got to be a no.
I'm with you. Look, this is a hell of a time for a crypto company to try to be going public. I mean, crypto prices are sinking like a stone.
Oh, and then there's that.
And so I just think, that the timing is not working out for them. And this is why I'll be so interested to see if they can continue with it, because to me, it suggests that at least they believe that prices have further to fall and they might as well cash out while they can. I mean, they do not have to go public, right? I mean, so they're already they're cash flow positive, right? So they had operating income the first 9 months of, $202 million. This is just an asset manager. I mean, they can create whatever products they want to create. And if money comes in, right? But this is not, the proceeds of this IPO are exclusively going to cash out, right? The founders and the early investors. It's not going to grow the business. Right. So you don't need to do this. If you're Grayscale, you don't need to do this. If you proceed with it, it's because, you want to provide that liquidity to the early investors. You want to take something off the table. And the question is, why do it now when we don't know how far, prices are going to go, further down in crypto? Why not wait till things stabilize? And this is why I say, if they proceed, to me, it's frankly probably a sell signal. And I don't know how you price this damn thing, to be honest with you. Because we've talked about first day pops in the past. This could be a first day drop on this sucker if they price.
Yeah, I think that the underwriters better be prepared. In particular in this environment, I think the underwriters better be prepared to start soaking some of that up, which is always difficult to do. And that's another thing. I mean, their fees are disclosed in there, but I mean, underwriting fees are not cheap. You can think 6 to 7% of whatever they raise are going to be fees. So you're going to be paying that. Investors are going to be paying that, or potential investors are going to be paying that. I mean, I just can't get behind this one. I would love to, but I just can't, because it just, the business model at these prices, with what they have on the table. I mean, they're only going to go in one direction. The management fees can't be raised. I mean, they're only going to go down. Could they, could they make up for it in additional AUM? Man, it's going to be tough, in particular in a market where your AUM is falling with the price of crypto.
All right, well, that's a good note to end on. There are better ways to get digital asset exposure, folks. But again, nothing we say should be interpreted as investment advice. All right, Jimmie, a lot of fun. Have a great weekend, and I look forward to doing this again next week.
Hey, you do the same, Lee.